Welcome to this edition of Beat the Street on IGTV. We are taking you through to the opening of the US equity markets in an hour's time. In the next 15 minutes, we'll be covering all the news you need in order to formulate an opinion on the direction of the markets. We're getting some breaking news. I'll cover that in just a minute. A quick update on what's happening in terms of the headlines. As you await those non-farm payroll numbers, it's now doubtless going to be the key pivot point for the day. Depends on how far removed from the 180,000 jobs I think they're looking for in order to satisfy the market expectations. Outside of that, it's a question of watching what's happening with a couple of companies. Apple, first of all, fiscal fourth quarter earnings produced after the bell last night. The stock is up, and we are looking for a positive start on Wall Street when things get underway. Coinbase, another one, all sessions last night on the IG platform, up a touch, another one that could well move the markets. And also the equity markets generally. The US 10-year Treasury yield is now down at 3-week lows. It's now down below 4.7%, which for the 10-year is the lowest we've seen since the 13th of October. Equity markets up as a result of all this. Let me just quickly tell you what's going on in terms of the headlines, because getting some breaking news coming through from the markets on non-farm payrolls. I want to show you this chart because euro dollar is absolutely flying. You can see we've seen the average numbers of hourly earnings and the non-farm payroll figure just released. Instead of 180,000, it was 150,000 jobs having been created. This after a revision on the last month's numbers, up 330,000. That was down to 297,000. So less jobs have been created, but there's still sufficient numbers to satisfy those that are suggesting that the rise in interest rates is killing the economy, because it's not. It is actually ticking along quite nicely. The unemployment arena. We've got the unemployment rate, which was expected to stay at 3.8%. That has actually gone out to 3.9%. Now, the disparity between the unemployment rate and the numbers I'm just telling you about, the 150,000 jobs having been created, under normal circumstances, this would take the unemployment rate down, but it's gone up because they're calculated differently. They're different parts of the month. They're calculated differently in terms of their makeup. We just the other day saw a slightly weaker than expected number on ADP. So quite frankly, this absolutely falls in line with what the ADP was telling us. Average hourly earnings, 4.1%. We've been looking for a drop down from 4.3 to 4%. So it hasn't gone quite as far, but it is nonetheless down. Average hourly earnings month on month for October coming at 0.2. We have been expecting a 0.3 print. So there you can see euro dollar, 1 minute chart here. Let me just quickly dial back into the daily chart so we can see what's happening. And in fact, this is the highest print we've got for the euro dollar now since the 20th of September. So we are now looking at some substantial gains for the euro at the expense of that weaker US dollar. Now, that weaker dollar has taken us right out of the bottom of this Andrews pitchfork I've been talking about. So it's time now to take this off, I think, officially, so we can get rid of that and monitor what's now going on in terms of these channels that we've been trading in. The 105.50 has been broken. We're now down at 105.16. The next line of support down here at 104.87. So we've got declines at the moment across the dollar complex. Quick update on where we are in terms of the equity markets. Things punching higher. I'll just show you the minute-by-minute candle on the Dow. You can see quite clearly the reaction to these markets and this latest reading suggesting that it's now possibly maybe opening the door to the Fed getting round to this idea that they will not be raising interest rates again. That certainly is now looking what's likely to be priced in. If we close at these levels, it'll be the highest closes here on the Dow since the 25th of September. So things are looking good. They are improving. And this week's rally that we've seen in equity markets pushing higher and higher and higher still as we see things move. We've now got the US 10-year yield now down below 4.6%, 4.58%. This is now the lowest print that we have seen in terms of the yield on the 10-year Treasury. This is the lowest print we've now seen since still the 13th of October, but nonetheless, that was the point at which we started to begin to realize that the Fed might still have its foot on the accelerator. It hasn't happened, and the Fed has passed through this, and we're now getting this evidence that the economy is ticking along nicely despite the fact we've got a rise in interest rates up to these current levels. It's likely to stay there for some reason, for some time to come, for good reason. But generally speaking, it's been well taken by the markets. This is the NASDAQ 100, the Tech 100, on the IG platform, the highest trade we've seen there since the 19th of October. So you can see that the payrolls increasing by 150,000 in October, less than expected, having a positive effect on the overall markets, that is for equities, but not so much on what's happening with this currency market, where we've seen a continuation, this rise for the euro against the US dollar. Now, we should quickly run through where the next line of support and resistance is likely to be. We're knocking up against this high at 106.95. If we get a candle close beyond there, there's not then much stopping us all the way up to these highs up here, although I would suggest possibly maybe this might be a good area to watch out for, because it's been both resistance and support in the past. So I think that the 107.69 is going to be the next line price target if you get a candle close beyond the 106.95. So things looking good for all, well, not so good for the dollar, but all those currencies against the US dollar, we are seeing rising at the moment. Just want to quickly take a look at what's happening with sterling as well, because that's another area of the market where we've been seeing some gains for sterling because of that weakness in the US dollar. It's exactly the same thing. We've not got to new recent highs, but nonetheless, we're seeing money going to other currencies, not just the euro, other currencies against that US dollar coming through from the breaking news. So that is where we are in terms of that. Let me just quickly tell you, at 2 o'clock this afternoon UK time, that's in around about 90 minutes or so, just less than that, ISM Services PMI data is released. The pace of expansion is forecast to slightly slow down to 53 in the month of October from 53.6 a month ago. But nonetheless, anything over 50 is expansion. Now, let's take a look at some of the other areas of the market I think that could be of interest to those trading the markets. And we're getting an indication of a higher open for Apple. Apple reported fiscal fourth quarter earnings that beat analyst estimates last night. However, overall sales fell for the fourth quarter in a row. Every hardware business outside of the iPhone fell year on year, with big declines in the iPad and Mac segments of the business. iPhone revenue, 43.8 billion, 81 billion. That's exactly what was expected. We got earnings per share $1.46 on expectations of $1.39. Revenues 89.5. We've been looking for 89.3 billion. Gross margins, that's a really good indicator of how things are in terms of profitability. That's moved out from 44.5 to 45.2. So every iPhone they sell, they're selling for a higher margin. Apple's Mac and iPad business both saw drops in revenue, but Apple shares in the session yesterday fell 1.9% on the IG platform. Apple signaled the company may not return to growth over the Christmas New Year period, but that's now been overlooked. And we're now looking for a gain at the start of today's session on the US markets. This is today's trade, all sessions on the IG platform. And we're now peaking above the candle bodies of the last 2 or 3 days. Not quite as high as we were mid-session after the close last night, all the way up at $181.69. But then the company came out and said that the fourth quarter is likely to be flat or possibly even worse. Fourth quarter of the calendar year, I should say, the fiscal first quarter, because that takes us through the Christmas New Year period. That's likely to be flat. So you can see there that we are looking potentially for a higher start for shares of Apple at the beginning of today's session. Meanwhile, Coinbase, want to touch on this as well, another stock, all sessions on the IG platform, so we can get an idea as to how that's trading ahead of the open today. Third quarter loss narrowing. Sales beating expectations, the lift from the crypto exchange's new agreement with stablecoin issuer Circle. Earnings per share coming in at a loss, nonetheless, still a loss of 1 cent. We had been looking for 54-cent loss for the period. Revenue, 674 million, 650 million were the expectations. So that's slightly better than had been expected. Let's look at what's happening on the chart. Currently up 1.4%. Yesterday we were up 1.9%, I think, at the close. But in fact, what happened was mid-session we peaked all the way up here at 87.33. People getting carried away on the upside for Coinbase. But the declining quarterly trading volumes is most concerning, which I think is why we ended off the highs yesterday. That fell to 76.1 billion, missing analyst expectations of 80.1 billion, and a 52% fall from last year's number. Now, before its third quarter earnings were released, Coinbase's stock had risen 148% year to date from the point it was at the beginning of the year. It doesn't look an awful lot, but when you look at where Coinbase has come from, well below the red line here, red dotted line, which is the IPO price at $225. Currently trading 82.40, but expecting a rise at the start of today's trade for Coinbase at the beginning of the session. Let me just stay on the chart and just quickly wrap up a couple of areas of the market I just wanted to follow up on. US crude, second day in a row of gains. Hopes are that this growth we've seen in certainly the US economy and other economies around the world will begin to start to build and demand start to pick up, which is one reason I think why we're seeing a rise in the price of oil. And I want to leave you with what's going on with gold, just rounding off the week in what has been a positive week. And we're back up above the 2,000 level today. That drop in the dollar has seen gold rise. This is likely to continue to give an impetus for all the dollar-denominated commodities, but gold especially, which is particularly sensitive to that anymore, and will then take out the highs that we saw on the 27th of October. And if we take out those highs, we're then at the highest level on gold not seen since the 16th of May this year. And that's it from me as we look to the start of today's US session, looking for gains as we saw non-farm payrolls coming weaker than expected, proving to those that have a thought on where interest rates are going that maybe the Fed might be done. We'll be back at 4 o'clock this afternoon with a look ahead to next week's trade.